Welcome back. Well, time for an exclusive conversation now. Star Health Insurance tells CNBC TV 18 that they are evaluating plans to entering the motor insurance market and are also keen to enter life insurance. Our colleague Yash Jain spoke to Anand Roy, who's the MD and CEO of the company, on the future expansion plans and business outlook. Listen in.
As far as this year is concerned, we believe we are aspiring to do around 18,000 crores of premium as compared to 15,000 crores which we did last year, which will translate to around 18% growth, which should be in line or little better than the industry growth rate.
Okay. Now, if I have to understand a few things on the underwriting level, in the first quarter, the underwriting profits came down a little bit. I think FY24, you ended with a number of about 90 crore there. FY25, what is the kind of improvement that we could have, or what is the kind of number that you expect to see at the underwriting level itself?
See, totally, our aspiration is to reduce the combined operating ratio by about 100 basis points. So this will come off an improvement in our underwriting, results, as well as it will come through some improvement in our expenses. So I do not want to give a particular number because see, underwriting results are a factor of many things. It's all about the disease outbreaks in the society. As I told you, we are an insurance company and we have to be prepared for uncertainties. So while we did what we did last year, our aspiration is to improve upon that, but I do not want to hold the company to a particular number as far as that is concerned.
Okay. Just taking the history in terms of the last few years' performance and putting that context into where you want to grow, 30,000 crore in the next 4 years. Would that mean, at least by the last few years' performance, that the underwriting profit could be well in excess of 500 crore with the combined ratio that you've maintained in the last few years?
So we have guided for, or we have kind of, planned internally for tripling our profits after tax in this next 4 years' time. So last financial year, our PAT was around 850 odd crores.
Correct.
We expect that by FY28, when we reach 30,000 crores, our PAT should be in the tune of 2,500 crores. Now, what would be the mix of underwriting and other areas in that?
I've just gone by what you've done in the past.
Yes, probably. I think aim is to make sure that underwriting standards and underwriting profits improve, which will be guided by various things. But I think overall profitability of the organization is what we are focusing more on.
Okay. A word on the combined ratio, of course. You've said that about 200 basis points is overall that you see a reduction over the next 4 years in your combined ratio. Help me understand the journey towards it. This financial year, what could be the reduction? And then once it keeps improving, it gets harder for you to bring it down further. Then for the next 3 years, what could be the journey?
So this financial year, we are looking at about 100 basis point improvement and a 50 basis point improvement after that. As you rightly said, it's not possible to keep on reducing it by significant amounts every year. So gradual reductions will happen over the year. But this financial year, we believe that 100 basis point improvement over last year can be done.
Okay. One thing that I wanted to understand is something that which the industry is anticipating, that's the composite insurance license. Assuming that December, the winter session, it does find the approval that is required. What would be the right amount of time that you would take to enter the term insurance as you plan to sell that side? Would it be a financial year FY25 or calendar year 25? Or am I being ambitious with both those numbers?
So yes, first of all, we have to see when this bill passes through and how long the regulator takes to articulate the the guidelines for a composite license regime. So we'll wait for that. But what I can tell you is we are very keen to enter into adjacencies. We are looking at protection plans in life. We are also looking at non-life segments, and we are evaluating all of these as we speak. Finally, what the regulations, how they come out, what the board approvals that we will have to take, what will be the capital requirements for these kind of composite license regime. We'll have to look at all of that and then evaluate. But we are very interested in this particular development.
Okay. You spoke about other non-life segments, and there has been a report that you are also within the organization at this point of time contemplating and interested to enter the motor insurance space. It's a large market, of course, the two top markets for general insurance companies. What is the thought, because it's distant from what you do right now, what is the thought behind entering the motor insurance space, and is there any specific kind of business that you would want to do? If you could elaborate on that particular point.
So we have conducted surveys within our distribution system to understand what are the opportunities which is there, and ever since this composite license came into discussion, and we are getting strong feedback from the market and from our distributors that they will be happy to associate with us for other lines of business, including non-life. Okay, and as you rightly said, we have a 20 million customer base. All of them probably have vehicles, whether a motor car or a two-wheeler. All of them have homes. All of them definitely are not protection plans are very low in our country. So these are opportunities that we are evaluating. We have to see what are the profit pools available in which areas, and we will let you know when we have a concrete plan. But right now it is just an evaluation stage. We will come back to you.
Okay, a couple of questions on some things which transpired very recently. Just about last month, there was certain amount of hiccups when it comes to a few hospitals in the Delhi region, particularly the Max brand. Help us understand what are these conflicts, because very recently we saw you resolving certain issues with certain hospitals in Gujarat. What were the issues with Max? Has it been resolved or not? And on the other side, a lot of consumer complaints are coming with respect to claims not being settled. Are you looking at it very actively now to sort of bring down those numbers and ensure the partnership with hospitals does not throw such issues at you regularly?
Absolutely, that's a good question. And see, we all have to accept that hospitals, insurance companies have to live together in this business, okay? And there is no question of having conflicts with them. There are negotiations, there are commercial agreements, and there are commercial discussions which happens, because of which certain hospitals partner with us on a preferred mode, some of them don't. These are ongoing, discussions that will keep happening. I don't want to name any particular hospital, but I think, at Star Health we have 15,000 hospitals growing the network, and we believe that, we will play an important role in the relationship with hospitals also. So we have no qualms about that, but we do not want to be adversarial in terms of our partnership with hospitals. That's very clear. As far as customer service and customer experience, claim services are concerned, I can tell you that that's paramount to us. We are very, very keen about making sure that our customers get the best experience. And that's why, having a good relation with the hospitals also play a big role, because sometimes the friction, not sometimes, most of the time the friction happens at the hospitals, when the customer is getting discharged or wherever. So I think these are areas where things will keep on improving, but I can assure you from our side that, we believe that customer experience has to be the top.
Interesting conversation there.